Ever wondered why some prices seem to hit a certain level and suddenly bounce back? Or why a stock price struggles to break through a specific price point? Welcome to the fascinating world of trading where every tick of the graph narrates a story. Today, we unravel one such tale, the tale of support and resistance. You see, every price point on a trading chart is like a battleground where buyers and sellers lock horns. Support and resistance are the invisible lines drawn in this sand, marking the territories of these two forces. A support level is like a safety net, where the price tends to stop falling and might bounce back. It's the price level at which demand is thought to be strong enough to prevent the price from declining further. On the flip side, the resistance level is like a glass ceiling. It's the price point where selling is thought to be strong enough to prevent the price from rising further. Why are these important, you ask? Well, these levels help traders predict price trends, identify potential reversals, and make informed trading decisions. Visualize yourself walking into a room blindfolded. You'd naturally feel for the walls to navigate, right? That's what support and resistance levels do for traders. They provide a sense of direction, a roadmap of sorts in the often chaotic world of trading. Understanding support and resistance levels is like having a secret key to the market's movements. And who wouldn't want a secret key, right? So, let's delve deeper and unlock the mysteries of the market together. TradingView, a popular platform among traders, offers a variety of tools to visualize and analyze market trends. Now, let's dive into this hub of financial insights that is a favorite among many. TradingView is not just a charting platform. It's a global community of investors and traders coming together to share ideas, learn, and make informed decisions. TradingView's array of features make it a versatile tool. It provides real-time data, comprehensive charting tools, and a multitude of indicators. But what makes it truly stand out is its user-friendly interface and its ability to allow users to draw on charts. Tools like the trend line, horizontal line, and ray are particularly useful for drawing support and resistance lines, the backbone of technical analysis. No matter where you are in your trading journey, TradingView is equipped to cater to your needs. It's like having a financial advisor right there on your screen. With TradingView, you have the power of market analysis at your fingertips. Now imagine you're sitting in front of your computer, ready to draw your first support and resistance lines on TradingView. To begin, let's make sure we're all on the same page. We're talking about support and resistance, two of the most fundamental concepts in trading. Support is the price level where demand is thought to be strong enough to prevent the price from falling any further. Resistance, on the other hand, is where the price tends to find opposition in its path of ascent. Now, let's dive into the practical part. First, navigate to TradingView's website. Once there, select a market of your choice. It could be stocks, forex, cryptocurrencies, or any other market you're interested in. Look for the Chart button at the top of the page and click on it. This will open a new page with a blank chart. The first step in drawing support and resistance lines is to select the correct chart type. For our purposes, we'll use the candlestick chart. This chart type provides a visual representation of price action during a specified time, allowing you to see the open, high, low, and close prices for each period. Next, choose the appropriate time frame for your analysis. If you're a day trader, you might want to use a shorter time frame like 1 minute or 5 minutes. If you're a swing trader or long-term investor, a daily or weekly chart might be more appropriate. Once you've selected your chart type and time frame, it's time to identify areas of support and resistance. Look for price levels where the price has bounced multiple times in the past. These are likely areas of support and resistance. To draw a line, simply click on the horizontal line tool on the left-hand side of the page, then click and drag your line to the desired location on the chart. You've now set the stage for your analysis. It's time to start drawing. With your chart set up, you're ready to identify key price levels and draw your support and resistance lines. As we delve deeper into our trading journey, it's crucial to remember that these lines represent the psychological barriers in the market. They act as a mirror, reflecting the sentiments of traders all around the globe. These lines are the footprints of the collective emotions of fear, greed, hope, and regret. Now let's find those significant price levels. Start by zooming out on your chart. You want to capture as much data as possible. look for areas where the price has made significant highs or lows. These are the levels where the price has bounced back or broken through. Once you've identified these key areas, it's time to draw your lines. On TradingView, you'll find the horizontal line tool in the toolbar on the left. Click on it, then click on your chart where you want to place the line. Remember, these lines represent areas, not exact prices, so it's okay if they're a bit off. Next, we move to resistance lines. Resistance is where the price has trouble breaking through. It's like a ceiling, keeping the price from going higher. Look for areas where the price has hit a high and then fallen. Draw your lines just as you did for support. Now take a step back and observe. You'll see that the price often bounces between these lines, like a ball bouncing between two walls. This is the market at work, the constant tug of war between buyers and sellers. But what if the price breaks through a line? This is where things get interesting. A break of a support or resistance line can signal a change in the market sentiment. A broken support can become resistance and vice versa. This phenomenon is known as a role reversal. Now you might be thinking, how do I know which lines are important? Well, the more times the price touches a line and reverses, the stronger that line is considered. A line touched by the price 4 times is generally considered stronger than a line touched twice. Remember, drawing these lines is more art than science. Don't worry if they are not perfect. The key is to understand what they represent and how to use them in your trading decisions. With practice, you'll get better and more confident in drawing your support and resistance lines. So keep practicing and happy trading. Drawing support and resistance lines is a skill that improves with practice. As we delve into the art of crafting these crucial lines, remember that perfection is not the aim, but rather a clear understanding of market tendencies. Firstly, make use of price history. This is your roadmap to understanding how the market has behaved in the past and can provide valuable insights into possible future movements. Look at previous highs and lows and note how the market reacted at these points. These are potentially your areas of support and resistance. Next, always consider the market's volatility. In a highly volatile market, the swings between highs and lows can be extreme. In this case, you may want to adjust your lines to capture these swings. On the other hand, in a less volatile market, the price movements are more subtle, and your lines may need to be drawn tighter to capture these nuances. Furthermore, don't be afraid to adjust your lines as necessary. Markets are dynamic, they change, and so should your lines. If the price breaks through a line, it may no longer be valid, and a new line may need to be drawn. Another helpful trick is to use different time frames. A resistance line on a daily chart may not be visible on a 1-hour chart, and vice versa. By switching between different time frames, you can get a more comprehensive picture of where the support and resistance levels lie. Remember, drawing these lines is as much an art as it is a science. There's no one-size-fits-all approach, and what works for one trader may not work for another. It's about finding a method that works for you based on your trading style and risk tolerance. Lastly, practice makes perfect. The more you draw these lines, the better you'll get at identifying potential support and resistance levels. So, keep practicing, keep learning, and keep refining your skills. With these tips and a bit of practice, you'll be drawing support and resistance lines like a pro in no time. Today, you've learned a valuable skill in trading, the ability to draw support and resistance lines. We've journeyed through the significance of support and resistance in the world of trading, understanding how these boundaries can guide your investment decisions. We've also introduced you to the impressive tool, TradingView, and its myriad of features ideal for both novice and seasoned traders. Together, we've explored how to draw these critical lines, breaking it down into 2 parts for a comprehensive understanding. We've visualized the ebb and flow of the market, identifying those crucial points of support and resistance. We've also delved into some essential tips and tricks to refine your drawing skills, making your technical analysis more precise and effective. In closing, remember this: mastering support and resistance is a game changer for your trading journey. It's an art and a science that comes with practice. So keep practicing and happy trading.